All right, ladies and gentlemen, in the next session here at Global Fintech Fest 2023, we're resuming back with yet another interesting session. We shall discuss on India's digital journey, challenges with current e-commerce paradigm. I request you all to please be silent. We are going to proceed with our session. ONDC network approach and architecture, overview of NOCS, information flows NOCS, NOCS functionalities and benefits of NOCS. To understand more about NOCS, we have our speakers for the session, Nitin Mishra, CTO ONDC, Subhradeep B, Incharge Product Platform NBBL, and Swaminathan V, Incharge Technology NBBL. Can we please have them up on the stage very quickly? And with the help of your applause, please. Applause, please. Can we please have gentlemen coming up on the stage? Let's begin this session.
We are deciding who to start and how to start. But anyway, good afternoon. I take the honor of kicking off the session. Unfortunately, one of our partner in crime, Swami, could not join us. But we'll try and cover for him. Very difficult to cover for him, but we'll try and cover for him. Thank you so much. I am Nitin Mishra. I'm CTO ONDC. It has been, every time I talk to people and they want to know about ONDC, it has become more like a seven blind men on an elephant, right? Anybody who basically comes, hears something about ONDC, come back with a completely different, impression. Through some of these slides, I'll try and, debunk some of these myths. I would want it to be a more interactive sessions because I know it sometimes become very daunting for everybody to connect to what ONDC is. All of us are so very used to using some of these large e-commerce platforms like, Amazon, Flipkart. Relating to ONDC will become a little difficult because it's not a platform, and this is something that, we keep, it has become a cliched statement everywhere where we go. Anybody from ONDC, we start with this statement that ONDC is not a platform, it's a network, right? ONDC will never have a shopping app. They will never have a rider app. They will just be the facilitator of a network. So I'll quickly, sort of talk a little bit about, I'm sure many of you have attended other sessions. India's digital journey is not something which is not known. We started off with the absolutely no digital, framework back in 90s when the computers and computing was still, and the internet was still in evolving phases. From there to today, the kind of growth that we have had, right, with about with about 1 billion mobile connections, digital payments, which has actually revolutionized the way people transact, in the ecosystem. GST, one of the, marquee amendments to our constitution, and the largest tax reform and the largest tax transactional system that ever existed. Account aggregator, using a consent-based framework for the exchange of documents, so on and so forth. I mean, the more is said, it'll actually sound very less. Yeah. So let's just straight, dive into what are the current challenges in the ecosystem, right? If you look at typically the way the current platform model works, where both the buyers and the sellers are at the same platform, right? Because both of them are on the same platform, there is a, there is a huge information asymmetry that exists between the buyers and the sellers. The buyers are being asked to pay a particular price. The sellers are being asked to quote a particular item at a particular price, but there is absolutely no transparency how this price is discovered, right? So this is one of the major pain points in the ecosystem. Besides others, for example, payment terms, the settlement, the warranties, everything is basically driven by a single platform, which basically lacks the to removing the information asymmetry that exists in the market, right? Of course, because the innovation gets limited to a particular platform, any innovation around e-commerce can only happen in that platform. And how does ONDC trying to solve this problem? It's not working. Somehow. Yeah. Looks like battery gone. Sorry, it happens most often with me, Being from tech, the tech is the one that actually fails. So I think, with this in the background, and while we fix the problem in the tech, a small glitch. Uh, so what is ONDC, right? When we say it is not a platform, then how does the e-commerce transaction, takes place? In a typical e-commerce, in a traditional e-commerce setup, you go to Amazon.com or Flipkart.in or Amazon.in. You basically look up for a particular item. It gets queried from a local, cache or a local catalog inventory. It gets checked. You select an item. You make payment, and then the platform ensures that this product actually gets transferred from the store location to your home. That is how typically e-commerce is what is understood. But how can we actually look at unbundling this whole setup, right? When you say unbundling, at least some of you who are from the technology background will be able to relate that unbundling is not something which is very new as a concept, right? We started off with big monoliths, internet websites, to a service-oriented architecture where your whole website got converted into small, modules of functionalities. From there, we now see microservices, which are basically, creating small servicelets that, that basically perform a specific, function. If you look at Amazon, for that matter, if you go to Amazon and you basically look behind the browser, you will see that your browser is actually sourcing information from at least 20 to 30 different, URLs, which are service endpoints. So unbundling is not something which is new. But unbundling, taking it across the ecosystem at the line at what happened with UPI or what happened with email. If you look at a particular email, you may have an email account on let's say Gmail, and if you want to send an email to let's say Hotmail, all you do is you have an email client. It is complied to SMTP as a protocol. You write your email, your payload gets drafted, and it basically travels over to the other side. The other side looks at this payload, converts it into a user understandable format, and then show it to you on your email screen. ONDC is very similar to this concept, right? Nobody has to be on one particular platform. Your buyer platform could actually come from a banking app, can come from your payment app, can come from any place, can come from your social media app. Anybody with eyeballs can actually become a buyer app in this case, where the seller apps are actually agents of the sellers, right? They don't have to be necessarily on the same platform as the buyer app. And then these two can exchange information in a standard format, which is powered by what we call as backend, with an ONDC layer on top of it that enables the transaction to become successful between two entities. There's a little bit of a background on what happened with ONDC. We started actually back in 2021 when we started doing a beta. From Jan 23 is when we actually went all hog, and this is the kind of growth that we have seen. The amount of network participants that we just talked about, the buyer app, the seller app. Some more statistics. We started off with a framework where the protocol itself was evolving, and it was not very stable at that particular time. And that's when there were most of the issues that were being raised, which slowly started dropping down, and then now we are seeing it is actually coming down significantly with the addition of issues and grievance management. And one of the main problems that we saw in the network when we went live was around payments and payment settlements, right? Because in an unbundled environment, the payment gets collected at one different place, versus the supplier is actually on the other side. So there has to be a seamless, because this was one of the pain points where the settlement cycles from some of these large e-commerce players, and this has been coming as a feedback to us, is anywhere between 30 days to 60 days. Sometimes it even runs into 90 days to over 100 days, and we have seen this in practice. So how can we create rails so that it becomes beneficial for both buyer and the seller app, and of course all the associated elements in the chain. For example, even logistics on the network today. So a seller, imagine a small kirana guy, which is basically which has a store next door, can actually deliver that item without any hindrance to you, by not having a single logistics person available to him. He can actually go to the network and become a logistics buyer, and still be able to sell to anybody within the country where there is a logistics service available. I just explained, so if you, for example, you look at, let's say there is a bank app which you use. On a bank app, you can actually go to a bank app, Your bank app, if it is on ONDC, will be able to source the whole inventory which is available on the ONDC network and will be able to show it to you. You can make selections. After selections, you can do negotiations if needed. You can perform the checkout, and then once the checkout is done, payment is collected. The item reaches you. You can do cancellation. You can do everything that you can do on completely unbundled framework, where if you see all the ONDC protocols actually enable some of these things, and something which will get pretty clear in the next few slides. If you look at the structure of ONDC, we talked about SMTP, so SMTP also has the same structure. You have a header, you have a MIME types, you have body, then you have photos. It's the same structure that we have followed. Maybe SMTP is more at an application layer protocol. The ONDC or the backend, which basically powers ONDC, is more a higher level protocol. What we have is the whole journey gets divided into these four major components, and then there are core network services, which is basically post fulfillment, right? So we start with discovery, where you perform a discovery. A buyer app can actually perform a discovery, look at what all items are available on the network by broadcasting the information and then receiving. It's a typical DNS broadcast that you fundamentally see, where the recursion happens. Then there is an order flow where addition to cart happens, selection happens, then initialization happens, and somewhere in between, by using these APIs, you also do negotiations, and then finally you confirm the order. There are fulfillment statuses. After the order has been placed, there is a status call, update call, where the order construct is changing. The tracking, cancellation, all these are fulfillment calls, and then there is post fulfillment, which is rating and on rating. This is the core construct of ONDC protocol. This is what backend provides. On top of backend, ONDC has created a more like a stencil or a template that still uses backend as the underlying protocol, but then has business-specific templates that get enabled for a particular type of a transaction. What you see on your right is basically the core element which basically provides the support to network, right? In any network, once you have an issue, unlike the current system where a CRM is directly integrated into a platform in an unbundled framework, you need to create specification and standards so that the issues can also travel onto the other side. So that is why an IGM system has also been promulgated. And then one of the most important framework is reconciliation and settlement framework. One of the core problem in the network was the time delay between the money getting collected, the order getting dispatched and delivered, and the settlement money that comes to the seller, which has a huge economic inefficiency, in the sense your cost of capital actually goes out. The more you delay your payments, the more a seller gets delayed in getting their payments. The cost of capital increases, because then he has to raise more funds, get more working capital, and besides a lot of other problems that he goes through when his credit history is not good, he's not getting funds, he's not able to grow, so on and so forth. So our friend Subhradeep will talk a little more detail on what reconciliation and settlement framework is when we come to NOCS. This is a typical flow. If you look at ONDC, and probably all of this is also available on our web portals, you have interfaces and interface-less systems. We have people who are now enabling ordering on Alexa, right? So you can actually go to Alexa, you can just talk to Alexa like you talk to a storekeeper, can do negotiation online, and then basis the negotiation, you can place an order, money automatically gets deducted, and the order gets dispatched. Even those things are getting possible. All of them are basically being made possible through these RESTful APIs. Those of you from the tech background will understand. Internet works on RESTful, right? You basically get an HTML transferred onto your browser, which gets rendered. Everything is happening on HTTP, HTTPS for that matter, right? And some of them are sync, some of them are async. I don't want to go into detail, and those who want to understand how these work, we can actually have an offline conversation. Again, the issue and grievance management, this is a flow where you basically generate an issue, so here, while we are showing it as buyer app and seller app, anybody can be a complainant and a respondent. In an IGM framework, we identify with a complainant and a respondent. Similarly, on the RSP side, we identify with, while, for example, and explanatory purposes, we have explained it to be a buyer app and a seller app, but at a very basic level, this is basically a collector and a receiver. We'll talk a little more detail on this. With this, I hand over the baton to our friend Subhradeep.
Yeah, thanks, Nitin. I think before we go to the next section, maybe we'll take a little pause because I think, there was, Nitin explained too many things, too many APIs, RESTful and what all. Maybe just taking pause and maybe, any questions, any doubts so far you're having? Maybe, yeah, okay.
See, ONDC is not participating in any, unlike UPI, where you have a switch which is being run by NPCI. ONDC does not play any role. The only digital asset that we have is registry, right? And registry is, which is basically like a DNS server, right? And DNS server, you basically ask for, let's say, grocery. The registry will know who all are the seller participants who are supporting, who are basically providing items on grocery, and it will respond back with that. So there is no real digital asset that ONDC has. So there is no cost of transaction, at least at this moment. But of course, there'll be some subscription, or this is being worked out. At least for the next 1 year, there is no transaction cost that we foresee. But anyway, the transaction cost is going to be minimal because fundamentally it's only a small, data set that we are running centrally. Who says nobody owns the customer?
Shall I try to answer this question?
Yeah.
So maybe I will just draw a parallel, like you use UPI to make a payment, right? So you use any of the apps to scan a QR, and there are many banks and many, other systems back in the back of it that the customer is not aware of. So the customer is owned by the app which is you're using to scan the QR. So this is a very normal framework of an unbundled kind of an architecture, right? So one app you use to scan the QR, but there are other systems who are actually making the transfer happen. The same is the NDC. There is one layer of apps or like platforms where the customers user going and placing the orders, but there are other systems who are helping to fulfill the orders. But that doesn't mean that no one is owning the customers. Like right now, if you have a problem, you will go to the apps and you will raise a complaint, right? That my transfer didn't happen, my account got debited. The same here, right? You have buyer apps. Yeah, so then the buyer app will raise an IGM, will go to seller app, they will resolve it among themselves. The same. So that's the same architecture or process followed in the unbundled kind of an architecture. You want to add anything?
No, absolutely. I mean, if you look at a traditional platform also, right? In a traditional platform, there is a different team that handles consumer grievances and consumer complaints than somebody who handles the seller side integration, right? It is very similar to that. All we have done is to create a framework and standardize it in such a way that both the buyer app and the seller app, which is buyer app is buyer's agent and seller app is seller's agent, are able to interact and exchange, in a standard format and try resolve a complaint.
I think, yeah, that's yes.
What data are you legally within privacy compliance about tracking for storing? And what is the customer application for AI You mean ONDC as an organization, not as a network? These are two different things. ONDC as an organization is an organization which is chartered to define the standards in which the interoperability can actually be established. But a network is basically a collection of all these network participants who join ONDC as a network. Like nobody owns internet. Internet is a network, right? But then there is IETF who is responsible for standards on the internet. So if you look at ONDC, ONDC is equivalent of IETF, which also answered the previous question of yours. ONDC is not part of any transaction. The transaction, ONDC only plays role where they have a registry. When I say ONDC, it's now the organization. They only have registry, which acts like a DNS server. But once the address resolution has taken place, then it is pretty much everything is happening peer-to-peer. There is no data that is coming to ONDC. However, there is a requirement of certain open data framework, one that is required for ensuring that there is an observability on the network in case if there is an issue, but that is all anonymized and meta transactions, absolutely nothing that goes in the transaction. So at any given moment in time, ONDC does not, as an organization, does not intend to have any sort of a data that is PII or SPII in nature. There'll be some high-level economic aggregate that they will carry for the generic benefit of the ecosystem. Last but not the least, as part of our standards practice, what we are also trying to do is to create standards for data exchange between network participants. So depending upon their application of DPDP and the privacy policies, each network participant can actually expose certain data elements which can be called upon by other guys, again in peer-to-peer way, not in any switch way.
So I think we'll take the last question, then we'll proceed to the next slides. Yeah. You have 3 questions, okay? We'll take the first one.
You think last 3 questions?
No. Seller don't register on the buyer app. Seller get registered on seller app. And you can get registered on multiple seller apps. Okay. So if MACD is registered as a seller, it will appear at both PhonePe and Paytm. So and if in the future the third app came, so it will be available.
You can just go back to the diagram; it will explain it better. Go further back, further back, further back. Yeah, just stay here. Stay on that diagram. If you fundamentally see,
I think we should explain that diagram. I think this still.
So just go that.
This one. Okay.
This answers your question, right? So there are buyers and then there are seller applications. When you see MACD, MACD will actually be registered with this application. It can also be registered here. Now these two MACDs will have no visibility on what Paytm or PIN code is. When PIN code sprays out the request as per the network policy, and this is their condition for joining the network, they'll have to, take the whole inventory and make sure that they are displaying without any prejudice or without any special treatment. That is part of the policy. And if there is any special treatment, they must have a very clear disclosure to the buyer with an option to the buyer to remove all filters and see whatever has been consumed from the network. So that way, this problem of monopolistic, practices actually go away, because this seller will also have to abide by certain rules. The seller app cannot say that I will respond to Paytm, but I will not respond to Paytm without any reason.
So maybe just if we can stay on this slide for a while and just maybe try to explain this again. So here we have ONDC protocol. So this is not a platform. I think this is the most critical thing. See, unlike any other platform, you see in our country, ONDC is very different. It's not any platform. So none of these transactions go through ONDC. So ONDC as a protocol has defined that when some buyer app or seller app wants to be part of this network, these are the rules and the policies or the APIs that they need to implement. But ONDC as a server, as a switch, as a platform is not in between. Now here we have 2 parts. We have a buyer application and we have a seller application. So buyer application is that part of this network where the customers are going and searching for some product and service. But those buyer applications don't have any inventory detail. So those buyer applications don't know MACD, they don't know Namma 3 kind of riders, or they don't know any of these product or service side. That information is here. So when me as a customer go to Paytm, I'm taking an example, Paytm, which is as a buyer application side, and I search for some product. Say I search for a pizza. Now Paytm doesn't know, from where I can fulfill a pizza. So Paytm will broadcast that search to this network of seller applications using ONDC protocol, okay? Not a platform, but a protocol. Now that broadcast will go to all the seller applications who are into that segment of restaurants and foods and all that, foods and beverages. And these seller applications who all have their sellers who serve pizza, that result will be shown back to Paytm. So Paytm will have to necessarily show all the sellers of pizza to the customers. They can do some kind of sorting and all that, but that will be kind of a public algorithm being published by Paytm that, at what order they are sorting. Yeah, we are just coming to your question, yeah. So this is the basic architecture of ONDC. So we have the buyer coming on one side and the fulfillment happening from this side of it. Yeah. So I hope now it's clear to everyone here. Okay. Yeah, I think he raised his hand first.
So ONDC, as I said, right, we are like a DNS server. ONDC is an IETF, and IETF also owns the DNS infrastructure which is there existing, but then now that also has become federated, right? So there are root DNS servers which are operated by the DNS, ARPANET Foundation, which again IETF governs. But then that registration process through the root DNS servers has been now, given to those 7 distinct, like for example, AppNec, Euroneck, all those have been given the responsibility to register on their, register the domain names on their servers. Can we just proceed? I think we can take questions in the last one.
Okay. So I think, so we'll take this of the questions at the end. So now with this architecture, we have seen that there are buyer applications and there are seller applications. Now when we go to a buyer application, we place an order and that buyer application will collect the money from the customers. Okay, and from that buyer application, the money needs to go to the seller application and find to the seller who actually has fulfilled the order. So that is the settlement process, and to solve the settlement process, to make it seamless and convenient and fast. So we like NBBL has developed this solution called NOCS. Okay, Before let me introduce myself as well. So I am Subhradeep, and I am the product of NBBL, and I am part of the development of NOCS. I work closely with ONDC regarding that. Okay. Now, how the settlement works? Okay, I will just cover it fast. So we have these are entities who are part of the settlement process. The first entity is collector. So collectors is the entity who is collecting the money from the customers. Example: if you're going to a digital app, placing your order, you're making a digital, using your UPI or whatever, then the collector is the buyer app. If you opted for a cash on delivery, then the guy who is coming and collecting cash from you, the logistic provider, is the collector. So whoever is collecting the money from the customer is termed as collector. It can be a buyer application, it can be a seller application, it can be a logistic service provider. So anyone can be a collector. The receivers are the other parties who are part of that chain, and the money needs to move in. For example, buyer application has collected money from the customer. The buyer application needs to give, it will keep his commission with him, and then it will pass on the rest of the seller app. Seller app will again keep his part of the commission and pass on the rest to the seller. So this movement of money, so this is collected by the collector, is giving to the receivers. So receivers is the one who is receiving the money from the collectors. Yeah.
And one collector can have multiple receivers also.
Yeah, so one collector can have, so one entity can be a collector in one chain, but a receiver on the other chain. So that's how it will be. So basically in one pair, the collector is having the money, has to give the money to receiver. And then the settlement agency is the one who is responsible to settle the money between the collector and receiver. And they get that the instructions of how much to move between collector and receiver, that comes from RSP to the SA. And then we have the banks who are actually holding the accounts of those collector and receivers, or those buyer app and seller app, where the monies are moving. So this is kind of broadly are the entities who are involving in the settlement process. At a very high level, how it works. So I explained the collectors. So collectors is giving the instruction that, okay, hey, I have collected ₹100 for this particular order, and I will keep ₹1 and I will leave 99 rupees to a receiver. So this instruction will come from the collector to the RSP. The RSPs are connected to multiple collectors. So RSP is the one who is collating that information from multiple collectors, and he's summing up all this information, summarizing it, and give it to settlement agency. So settlement agency will know that a pair of collector and receiver, how much needs to be settled. So there can be 100 orders between a pair of collector and receivers. So that will be summarized by the RSP, and one instruction for that pair will go from RSP to settlement agency. So that's how it's getting kind of summarized or narrowed down. that now from 100 orders, one instruction coming from RSP to SA, the SA will have the information of the entire network of current receiver. They will do a netting. For example, one app A needs to give some money to app B, but app B also might need to give some money to app A. In that case, the netting will happen by the settlement agency, and they will do a netting at the bank level as well. And then a settlement will happen using the RBI and the settlement act. So there is a framework which does settlement. So this is the on a broader high level, this is how settlement will work.
Can I just add one point to it? I think this netting is very important for all of us to understand. While the netting will happen between the bank to bank transfer, right? What is not allowed is netting at the receiver level. So for example, Paytm has to send some money to, let's say, GoFrugal, right? Now, Paytm may also have to receive this money back from GoFrugal to make sure that the money flow actually is happening in a single direction and the proper transaction trail is actually maintained. The netting is not allowed at that level. Grossing is allowed, but netting is not allowed at that level. However, at the settlement agency level, what Subhradeep was explaining was that if HDFC has to settle 100 rupees to, let's say, ICICI Bank, and ICICI has to settle 50 rupees, only effectively 50 rupees moves. So that is what the fundamental difference between how the settlement or the reconciliation is happening on the RSP framework and how the settlement is working here. One more point that Subhradeep and I think we had a long debate on this on this particular point is RSP is a service which is available on the network. Now, an app can actually decide to develop that internally and become their own RSP. So someone like Paytm or a PhonePe or maybe a Magic Pin will basically decide saying that because they have the wherewithal of engineering power, they will develop their own RSA. So as per the policy, this is allowed. However, there are standard service providers. There are quite a few. It's actually on our web portal also, who actually have specialized in this service. Any buyer app who basically wants to be on network and still be able to settle with all the policies that has been put forth can actually use services of those RSPs to settle the money. I just wanted to add those 2 points.
Yeah, sure. Thanks, Nitin. So this is a more zoom-in version of that flow. I don't know how much we should cover, but the same, there's a collector. I think we have already covered, so I must keep this slide. Okay. So this is a more of a technical architecture of how the platform works. So we getting the request from the gateway, the API gate is receiving. We are queuing it, and then we have all the processes, transaction consumer process at one side who is taking the request, who's calculating all the different parameters, giving response back to the queue, and then we have different batch processes and the files which is getting settled with the banks and with the RBI. And so this is a kind of a technical architecture, and I don't know if anyone has a question, we'll answer, but otherwise I will just skipping it for now. Yeah, it's the same thing. These are primary functionalities of the NOCS platform. So I think I have covered most of them. So we kind of onboard network participant. What that means is that whenever network participant is part of a network, we take the bank account details, we validate them so that we know exactly where the money is moving from and where the money is going to. So that's one role we play.
We should shed some light on the second one, fourth one, and fifth one.
Yeah.
Those are the core features which is basically bringing trust on the network.
So yeah. So first step is obviously we kind of onboard networks, we validate their accounts, and before we do the settlement, like we actually kind of so we as an settlement agency, like NVL settlement agency, we do it amongst the banks. So we debit one bank and credit another bank. But before we debit any of the banks, we check actually the money is lying with those network participants. So for that, we have the second step of checking the balances. So we check the balances of the network participants with the bank account. They should have the sufficient balance so that the settlement can go through. So that's the second function that we do. Then the net settlement that we already explained, that if like one bank having 5 participants settling to another bank having 10 participants, and so X amount going to one bank to another and Y coming back, then we do X minus Y. So that's a net settlement. And so once we do the net settlement, the next steps come is the summary file that we give to every bank to settle with their network participants. That's the fourth step. And then this is the IGM framework that, if there any kind of dispute, so we support that IGM net framework with the information that is required. Yeah. Sorry, which one? So we have APIs integrations with the banks. We check that. So we have APIs. So yeah, so when the banks are opening the account with the NP, so NP gives the consent to have this check, and then with the bank we have that.
So there is a
integration.
construct of network participant account. Again, between NBBL and ONDC, it has been drafted out. There are certain triggers basis which this network participant account can be opened and operated upon. It's a non-operative account, so there are certain rules with which the money can actually flow in and out of these accounts. As part of the opening of account, yes, the consent is definitely required. So it is actually required at the time of opening of account, which is provided. And then, of course, network participant account being a non-operative account, in many cases, this will only be used for ONDC transactions, right? Any money which moves out of this account and goes to the current account is not where the balance check is going to happen, if that was the concern.
Yeah, so I think it's a very important point. So this account that this network participant will hold will be non-operative. So they cannot instruct the bank that move this amount to any other bank account. It will always be through this RSPSA framework, which have those validations, and then only the money will move. So this will put a control of the money that moves across the network. Nitin, you want to cover this slide?
Yeah, I mean, these are some of the, we'll come back to you, sir.
Yeah, we are just last few slides, I guess.
Last two slides, I believe. These are a lot of opportunities that are available while ONDC, ONDC as an organization has a charter to facilitate the network. There are a lot of scope of innovations, right? For example, we have people developing adapters. We have people who have, I just gave you an example of Alexa. There are people who are developing SDKs for Alexa to facilitate the ordering on the network, right? We are onboarding multiple domains. For example, finance is a domain that is getting onboarded as we speak. Mobility, a Uber-like service, which is also getting onboarded onto the network in an unbundled format. So there is a lot of scope of, technology and technical development, process development, legal development. I think these are some of those opportunities that we actually wanted to talk about. RSP or reconciliation and settlement services. I think a lot of participants on the network are going to rely upon some of these participants who understand the financial as well as the transactional aspect of digital commerce. They will actually play a very major role in bringing the stability and efficiency into the network. This is what a pipeline looks like. It's continuously growing. I'm so scared putting this slide up. Every time I show this slide, by that time we would have already incremented by a few thousands. So, don't look on the leftmost side, but just focus on what we have on the right-hand side. We have a very healthy pipeline. It is continuously growing. We started off with about 2 or 3 participants. Now we are close to about 70. And within the next couple of months, there is a huge pipeline. We are expecting this to go beyond 200 plus within the next few months.
Yeah, so I think these are benefits of the settlement framework that we just explained. The trust, because the movement is controlled, and then the efficiency and speed and cost. So I think with this we have come to the end of our slide, yeah. So we can take a few questions.
So as we explained, right, the seller's agent is a seller app, buyer's agent is a buyer app. From network perspective, you only onboard one of these platforms, which is either a buyer app and a seller app. Each seller, then these seller apps have the responsibility of going and reaching out to their sellers and onboarding them. Some of them have auto onboarding processes. In fact, a lot of seller apps are now focusing on smaller markets, the tier 4 and rural markets. And they are developing solutions to onboard those small, stores onto their platform in an automated way. So it's fundamentally the seller app and the seller who will basically interact and then make sure they get onboarded onto the platform and visible on the network. Yes, of course. I mean, it is like accessing internet, right? I mean, you go to a browser, you simply look for, if you want to buy something, you say, I want to buy iPhone. You will find thousands of people who are basically selling iPhones, which has been scraped. In this particular case, every seller has a freedom to expose and advertise their product on the network in the way they want on their terms and conditions.
Fraud merchants or any disputes are getting easily addressed or controlled, right? In this case, what is the strategy? How are we going to control it? If let's say there is a fraud merchant present, okay, the seller itself is a fraud. He's taking the money, not delivering the goods, or the goods are not of the good quality or something like that. Only that seller app is having that particular information, right? He may be available on multiple seller apps. How that information is going to get circulated to other seller apps and all.
Do you want to answer that question? So just add to what I say, because we have discussed a lot on fraud. Valid concern. However, if you look at the network, right? So we talked about rating and scoring. ONDC has also created a framework for scoring of sellers. So in case if there is a seller which is uniquely identified by some of the globally identified identity like Aadhaar, Udyam Aadhaar, PAN number, GST, and so on and so forth, they get a unique recognition on the network. However, possibility of somebody fudging that information, is always there. There is a fraud management framework which is there in place with a lot of data elements, network observability, all of these aspects are there. Second, the incentive to collect, because in this particular case, buyer has a buyer app in front of him and seller has a seller app. For somebody to actually commit a fraud, there has to be a very massive level of collusion, which is very difficult. So fundamentally, even in the platform world, you have more, fraud than in an unbundled network where you're trying to address fraud in a smaller scale, right? So today, Amazon has to deal with maybe 10,000 sellers, 20,000 sellers, right? But in our case, while we are dealing with 1 lakh sellers, all these 1 lakh sellers are distributed amongst the number of apps, right? Some have 2,000, 3,000. So I think by reducing this scale and then, conquering by dividing is helping to reduce fraud. We'll keep learning as we come on to it, but I think let the transactions happen for a fraud to happen, because there is not enough honey on the network. But there are mechanisms available. I talked about scoring. There is a central ledger that we are using for scoring. In case if a seller actually gets a score, their GST actually gets blocked. They cannot onboard onto any platform. All of those become possibilities as we evolve, more into the ecosystem.
But I think even before we onboard participants, so there is a kind of a certification they go through, where there is a policy check that happens. So there's lots of checks and balances before actually participants, actually a buyer app and seller app is getting onboarded onto the platform, and then yeah. So when we kind of certify seller apps and when we enforce the policy on the seller app, so they are actually in turn ensuring that the sellers that they are onboarding, they are following the same process. Yes, so that's that's a chain that they follow. Like ONDC kind of set the process for the seller app to come on board. Seller app has similarly do the checks for the sellers to come on board. So that's how this whole network is getting.
So every participant signs something called NPA, which we say as Network Participant Agreement. As part of the agreement, all these tenets that Subhradeep explained is very well articulated, and everybody signs up for that. So every seller will do their own KYC on every seller app will do their own KYC on anybody they onboard.
All right, I think we'll have to take other questions offline. Time is up for this particular session.
I think it's had for a very long time.
Okay,
like to take one
sure.
question, yeah.
The last one, please.
So there are two parts to your question. One is how does buyer app promulgate what is the condition for them to render or not, decide to render or not render a particular seller. The second part of your question is how does the sorting works and at what power buyer has to remove the filters and see everything that is available in the network. For your first question, the conditions could be, for example, any buyer app say that as per this quality parameters, your catalog score has to be above 3 out of 5. Then only we will render. So any catalog which is being sent by a seller where the catalog scores goes below 3, buyer apps, because they have already promulgated, they say they can actually not render it. But what is not allowed on the network is, as part of the network policy agreement, and it's considered a violation, is where a buyer app can say, because I'm getting extra commission from seller app A and not from seller app B, I will only show seller app A and not seller app B. That is not allowed. The second part to your question is what has also been drafted, that there should not be any differential treatment. And for a buyer with an option, you can always do a filtering and sorting sort of a criteria basis a profile. That thing is allowed. But then every buyer app must provide buyer the power to remove all these filters and consume whatever has actually traveled on the network. This is covered in our policy. Any violation of this policy is actually sort of, the disciplinary committee actually, which is also of the network, takes care of it.
All right.
Yeah,
This-
thanks everyone.
Thank you, Nitin ji. Thank you, Subhradeep